Good morning, everyone, and soon to be good afternoon. This is Dre with Grind Major Day Trading, and I am grateful that you're checking out my recap today. If this is your first time watching my recap, I am a self-taught day trader, and my specialty is out of the money or low risk spread contracts. And my goal is to teach as many of you traders, whether you are an aspiring trader or an active trader. I want to teach you my methods so that you can become consistently profitable using as little capital as possible. So what we're looking at today is Monday, February 24th. And as always, I like to let you all know that we are using real-time data. We're looking at Thinkorswim for our charts. And I personally only watch futures and future options, Forex, and others. So I have that at real-time data, and the other items are going to say delayed because I don't watch those. All right. And we're going to go over today's trade plan. I gave this to everyone last night around 5 o'clock Sunday evening. So if you were a trade plan subscriber, you had this information well before the market opened, and with plenty of time to prepare yourself. So yesterday, I let everyone know that we would continue to go short, or we would be in good shape to continue to go short if we get price holding below 33.42 to 45. So let's take a look and see where that is. That is actually, just squeeze this down a little bit, 33.42 to 45 is going to be up here. Actually, I need to move this down a little more. Here we go. So we're just above this green line. Now, this green line is a level that I had marked on my charts, weeks ago, as we were making our way up. And now these levels that used to be resistance, they are now, they used to be resistance. They are now support levels that price is basically just slicing right through it. All right. So as I stated a moment ago, we would go short if we get price holding below 33.45 to 42. Here is 33.45. We'll just say 33.45 to 40. This is that level here. And as you can see, not by any coincidence at all, it happens to be where we closed at on Friday. We got a wonderful gap to the downside. We opened up at 33.10, which was definitely the sign that we were looking for to continue to follow the market down or follow it short. So I did not get in any position at that point. Obviously, I wanted to stay patient and see what they were going to do because, again, we did have a price gap. So they could just swing price back up and fill that gap and keep pushing price back up, or they could respect that gap and not get back into it, at least right now, and continue that move to the downside that we witnessed start to develop on Thursday and Friday of last week. So we allowed for this to take place. I had my alarm set for 4 in the morning. Oh, excuse me, 3 in the morning because the contract's open at 3. I was back at my chart at 4. And here's my entry at 4, shortly after 4 a.m. on a position that was 249 per contract. So let me stop here. If you all watch me, you know that this is outside of the price range that I like to select for my contracts. So why did I take this position? One, I've been trading for a while now and I have the capital available to take that trade. So let's start there. You can't take a trade unless you have the money available. Two, after looking at the history, before I even put this trade on, I took a look at the history and I saw that not only did we not make any pushes to try to break above that 3,300 level, which is right around towards the bottom of our price gap, I noticed that we made a really strong move to the downside. So I did not want to miss out on the market move, all right? Because remember, as I said last week, the market does not wait on you. You either need to be ready to get in or just sit back and wait for your next opportunity. So I was able to get in, and I did get into my position at, again, 4 a.m. Shortly after 4 a.m. this morning, because I saw that we were making a move to the downside. Now, and also keep in mind, remember, as I'm telling you this, remember, this is all I had to look at. I didn't have anything to the right. All I had was this right here. So as it stood at that point, at that time in the morning, this morning, it looked as though we were going to go ahead and continue that push to the downside. So I got in my position. Now, even though I did put 249 at risk, my stop loss or my low risk exit is always going to stay the same. I'm going to treat it just like I'm using $100 still. So if I were to go negative, let's say anywhere from $35 to $50, I would have gotten out of this position. All right. So although I had to use more money to get in it, I still treated it like I only had a limited amount of money to use. And that's very important for you to understand. All right. So we're going to move this forward and then you can see what took place. I got in my position and I just let the market work itself out. They ping-ponged back and forth, did a slight small whipsaw for the people who were in the market early. They were trapping some traders and enticing some traders to get into the market. That's the action that you see here. I waited this out, just casually peeked in on my position as the morning went on. And here we are at 8 a.m. I see that we have been making this small range. And I also noticed that at this point, at least at this point, it seems as though we started to try to make a curve up and we just didn't have the gas to push it up further. All right, remember, all I had at that point was what you can see here. So at that point, I'm looking at what appeared to be at that time weakness in the chart. I know the indicators might say that they were pointing up, but remember, this is after the fact. When this was live, these arrows were not there. And it did not show that this was going to push even further. So to me, it looked like we were trying to make a small push to get up there, but we just weren't going to make it. So I took that as another opportunity to get into another sell position. This one, I got it at a much better price at $48 per contract, and that was entered at 8 o'clock this morning. And at that point, it was off to the races. Again, these levels have been on my chart for over a month. Actually, these have dates on them. This is on January 6th, right after New Year's. These were January 13th, January 16th. So these are, you know, well over a month old. All right. And here they are becoming targets again. So this is how you make it simple for yourself. You understand how to find these targets, you mark them on your chart, and then you patiently wait for price to react to them. And based on what you see on your chart and what you have planned for yourself, you either place your trade, you sit it out, you do what you need to do. But using information like this, using your alerts, if you're trading on your mobile phone or even your computer, using your alerts that will keep you from having to just stare at your computer. You get an alert, you come back to your phone or back to your computer, and you execute your trade. All right. So got in my second position at 8 o'clock, which is 4 hours after my first one. And as you can see, it was a little bit lower than my first entry. So that was another good sign as well. At the time, it looked as though we were not going to get that push to the upside. We were still lower than my entry point, my first entry point. All good signs to me that we were just kind of winding up to get a further push to the downside. Okay. They did give us that push to the downside very shortly after my second entry. Now, why did I get out right here? It's kind of plain to see. I had this level 32.45 to 40 marked right here from January 6th. Definitely a good magnet. I was definitely in profit at that point when we got to this level. Also, my plan, and I'll continue, I said that in the plan, we would see price, continue to fall. And if it should fall, we should find some support around the 33.30 to 33.25 area. And if we get price holding below that, then we could see price fall considerably lower, possibly down to the 33. Excuse me, I keep saying 33 and I apologize. I mean 32. I'm pretty sure you astute individuals watching this video can figure that out. I'm referring to the 3200 area. So as I said in my plan, we get down that low and we're going to fall considerably lower down to the 3200s if we can get that momentum going. All right. So although I did want to hold, because as you all know, when the knives start falling, you either want to not try to catch it, or you want to be the person throwing the knives, like I like to teach. So once the sell-off started coming, and again, this started on Thursday, I did want to hold, but remember, this is all I had to see at the time. I was in profit, definitely had made my goal for Monday. I'm always teaching you all to not be greedy. You have all week to collect more profit, or, wait the market out, or whatever it is that you need to do. You have all week to do that. You should not ever be greedy. All right. Everything should be calculated. Just like you manage your losing positions, you should manage your winning positions as well. I know some people like to say ride your winners as long as they go, but I have shown over 9 years, almost 10 years, when you are calculated on both sides of your trade and treat them both that way, you're going to come out better. You're going to make sure that you're going to be consistently profitable. All right. So I got out of both positions just above the 32.46 level. We're going to say 32.45 just to keep it a round number, but I got out just above that level. All right. Now, why did I do that? Because one, this is the last magnet level that I have marked on my chart. Could we continue to fall lower? Yes, we could, but it is also very, very possible. Remember, we are at the bottom of a range that we've been trading. So it is very possible that price could have hit this level and just shot right back up. We've seen it do it before. We're probably going to see it do it again at some point in time in the future. So this could have been one of those days. If you're already in profit, why are you going to put that at risk? Especially if you hit your goal. Go ahead and get out. Go ahead and get out. And that's what I did. So I was out at just before 8:40 this morning, almost an hour before the market opened. So this, again, is to prove a lot of things. One, you can consistently do this using low risk positions. If you do it consistently, if you do it properly, you can build up your account. And if you have an opportunity like the opportunity that we took advantage of at 4 a.m., where it might cost you a little more, you won't have to miss it because you will have the capital available. We don't control the market, so sometimes you're going to have to step outside of what you normally do to execute the position. It might happen that way. So you have to be flexible. But again, we were at the bottom of a range, because this essentially is a range. We were at the bottom of it. We could have easily swung price back up, which would have, definitely given us a bad day today. But no, we stayed disciplined. We got in, we got out, we took advantage of the volume, took advantage of the low risk positions, and we were done at 8:40 this morning. So as you can see, price is essentially stuck right here. So everybody who's in the market right now, if they haven't done so already, they've probably done a good bit of jumping in, jumping out, taking small losses. All of those types of activities have made the bank a lot of money this morning. So it looks like we are going to get a further push to the downside. As you can see, we got our low back at the 32.30 area, which I also said in the plan that we would find the support around 32.30. And if we get below 32.30, then we could definitely see price get into the 32.15, 32.20 area, somewhere around there. But we're going to need to get a push to the downside. We got the rest of the day for that. It's not even noon yet. We have about 5 minutes before the noon bell. So we do have time to get that push, but I personally am out of the market and done for the day. So at this point, I'm going to just kind of watch it and see what it does so I can plan for tomorrow. All right. So that's today's recap. I hope you enjoyed it. Hope you got a lot of great information. And for all of you who are listening, who are in the Atlanta area, I am teaching my Create Your Paradise signature class. It's a one-day class. It'll be this Saturday, January 29th. Make sure you go to grindmajor.com to get your tickets for that. All right. So have a great Monday. Have a productive and a profitable Monday. And thanks for watching. And I will speak to you all very, very soon. All right. Have a great day.